Excel accounting practice problem. Pay employees form. Get ready because we're about to excel with Excel. Here we are in our Excel worksheet. If you have access to the Excel worksheet, would like to follow along, 2 tabs down below, example and practice. Example tab in essence being an answer key. In prior presentations, we put together this practice worksheet from a blank worksheet, which is great practice, and you can look at putting that together if you so choose. Now, we're going to be using this worksheet to record the transaction behind the processing of payroll, which, if you're looking at accounting software, would look something like this. We're going to be processing the payroll for our employees. We would have to do this, and this would go fairly smoothly, hopefully, if we had the proper setup with the payroll settings. Really, the complexity behind payroll is often setting up the payroll process and then adding the employee information properly. Then hopefully the system will help us record the payroll properly. So we might record the payroll in essence, or in other words, on a weekly basis, bi-weekly basis, semi-monthly basis, and so on and so forth. Once we process each of the employees, then hopefully it will calculate then the gross pay and then the withholdings from the employee, including the federal income tax, the state taxes, and then the Social Security and Medicare, and calculate our Social Security and Medicare, and so on. We'll get a general idea of this, noting that payroll is in a whole topic in and of itself with its own complexities and has a lot of differences and nuances that could happen from location to location for different states as well and localities. So we'll mainly be focusing on the Fed kind of taxes, the federal income taxes, the Social Security and Medicare, which in the United States would then be blanketing, in essence, the entire United States. Then there could be differences, of course, with the state taxes and so on. So we'll get a general idea of how the withholding system kind of works. So we're going to go back on over. We're up to the worksheet. I'm going to increase now back up to 140. So first thing to understand the journal entry is to get a general idea of how the payroll calculation will be put in place. For that, let's go all the way to the right and do kind of like a sub-ledger type of calculation over here, processing basically the payroll for just 2 employees in an example. So I'm going all the way to the right. I'm going to create a new worksheet over here, and I'm just going to build this thing out. I'm going to say we have our employees. We're going to have the gross pay. I'm going to call it gross pay. I'll put the pay on down below. And then we're going to have what I'll call FIT. That's the federal income tax, Social Security, Medicare. If I misspell anything, I apologize. And then benefits, which might be like health insurance that we'll take out and so on. And that'll give us our net check. So this is just a general idea here. I'm going to do my formatting. I'm going to bring this on down and then format this. Let's make that our black and white, as has been our tradition. This will already be there on your worksheet if you're using this worksheet. But if you're building this with us, this is us building it. We're then going to center this. Check the spelling on it. Did I spell in it? Employees is misspelled. Spell employees right, for goodness gracious. And then I'm going to make this a little wider, and I'm just going to call it employee 1, employee E1, this would be their names, by the way, of course, and employee 2. So let's say that employee 1 earns, let's say they earn for the year, let's say they earn $60,000 a year, and we pay them monthly. So this is going to be a monthly payroll divided by then 12. So hold on a second, 60,000 divided by 12 is going to be 5,000. That would be the growth pay. Then we're going to take from them that we're not going to give them 5,000. We're going to take out of their paycheck their federal income taxes, which would be based on the information we got from the W-4, Social Securities, which is more of a flat type of tax, easier to calculate. Same with Medicare for the most part, although there's a cap and other things we won't get into here. We do have a payroll class if you want to look at that. And then the Medicare, and then the benefits, which are voluntary things that are kind of, we're doing them a favor in that case, instead of acting as the government's collection agency in that case. So the federal income tax is something that's we'll have to use tables to basically calculate. It won't be based directly on the gross pay because they're going to have to give us other information such as their marital status and so on and so forth. So I'm going to just assume at this point that the federal income tax is going to be about 15%. So I'm going to take the gross pay, 5,000 times 0.15. That's not a standardized amount. That's just an amount that we're going to be using here. It would be dependent on basically the W-4 information. That's going to be one of the more complicated taxes to be dealing with, because that is dealing with a progressive tax system. That's the amount that will add up and we'll be reporting to them that we took from them on their W-2 at the end of the year. It all washes out once they file their Form 1040 and then figure out what they actually owe, and then they get a refund or the amount due at that point. The Social Security is more of a flat tax, so at this point in time, it would be the 5,000 times the 0.062, 6.2%. That could change. They're always arguing about it, but it's usually more of a flat tax, although there's a cap on it, and they keep on doing funny things to it, making it more complicated, but that's usually easier to calculate. Same with the Medicare, which would be the 5,000 currently at times 0.0145. That's more of a flat tax, 1.45%. Fairly easy to calculate. That's just the employee half of it, however. But there are other things like a plus up amount and so on that we won't deal with at this point. And then the benefits, which would be something that we provide, that we're not forced to provide in theory. We may, they may be in some cases, but like health insurance or something, or possibly a 401k, we're just going to call them benefits, 0.035, we're going to say, so 175 on the benefits. So this is just an example of the things that would come out of their check. These three were forced to take out by the government. They're going for taxes. This then is a benefit that we're taking out of their check and paying on their behalf, which is kind of nice, so they don't have to basically worry about doing it. That means that their net check would be equal to this number, 5,000 minus the FIT, minus the Social Security, minus the Medicare, minus the benefits. This is what you would see in essence on their paycheck stub. Let's do it again for the second one here, and let's say that that employee earns 75,000 a year, 75,000 divided by 12, and I'll do the same thing, 15% on the FIT, even though FIT is not a flat tax. That would be dependent on their particular circumstances, what they told us to withhold basically with their W-4. Social Security is more of a flat tax, which we can calculate more easily. So the 6250 times the 0.062, and this would be Medicare, which is more of a flat tax. Again, there's changes. They do funny things to it, but in any case, more of a flat tax, 0.0145. And then we've got, let's do that one more time. This is this amount times 0.0145. That looks better. And then benefits, we said, is going to be this amount times 0.035, which we're just making up the benefits amount. It would be whatever the actual benefits cost, whatever the benefits may be, 401k deduction possibly, the benefits, the employee health insurance, and so on. And then the net check, I'll calculate it a little bit differently this time. This equals the gross pay minus the sum of these items. So that's a little bit cleaner of a formula, a little bit more fancy, same kind of thing though. So that's going to be the general idea. Now note, you could see this and you could say, well, that's not too bad to calculate, but you do have other taxes involved too, like the state taxes that could be involved. And note that any one of these type of things isn't too bad, but when you start to increase the number of employees, just the sheer number of items that you're calculating gets kind of tricky. When you're looking at different states, that can also get tricky because the state taxes will change from state to state. And then when you also have to report this stuff, not only on aggregate, but on an employee by employee basis on every paycheck per employee, giving not only the current paycheck, but also the year-to-date numbers, it starts to get quite complex, and that's why it becomes a specialty in and of itself. There's no one piece that really is too complex in and of itself, but when you start to say, how am I going to compile all of this information in these in various ways that people want them in, that becomes complex just after a while. So let's then say that the total down here, if I total this up, now note when you're recording this into the system, you can think about this total as if they're like one employee and record it as one journal entry using this information as a sub ledger in a similar fashion as we do on like an inventory account, kind of backing up your transaction. But if you were to process this in the system, like in a QuickBooks or something like that, then it would record each individual paycheck because it would have to track each individual paycheck in the system. So for example, if you did this outside the system, had a third party calculate the payroll outside of your accounting software, you could enter this into your accounting software using basically one transaction, as if all your employees were one employee, making your financial statements correct, but not having the detail in the system, using then the outside resources, reports like this, to provide you with the detail. If you do it within the system, then you're going to have these kind of reports that are in the system, and every check is going to be recorded individually because these will each be individual check. So again, we get into that more in a little bit more detail in the practice problem. Right now, we just want to look at the journal entry. So if I sum this up all the way across, I could sum this across this way and copy it across. We can also recalculate it this way for a double check. This equals the aggregate, the gross pay for my 2 employees minus the sum of everything that was taken out for both of them. And that double checks our number here. Let's put an underline on this one. We're going to go font group and underline. Let's put some brackets around this and make it bluified. We want to bluify it because that's our colors that we're using here, just like the Excel is Fun guy used to do. Blue and brackets. And then we'll go to then we also have the employer taxes. So employer taxes. These are the ones we're not taking out of the employee checks, but that we're going to have to pay on top of, which includes our portion as the employer of Social Security, Medicare, and then I'm just going to call that the total. So there we have that. Let's bring this on down. Going to make this black and white too. We're going to make this black and white with the headers. Center that. Employee 1 and 2. So we can think of this for each employee. Again, we're going to have to match, which you could calculate again, but it's going to be the same amount. Kind of like you could think of it kind of like a 401k kind of thing. We got to match up these 2 amounts. We also have the federal unemployment tax, which I'm not going to deal with now because it's usually not as significant of a tax, although it can be somewhat complicated. We get into that more in the payroll course if you want to look at that. But we just want to get a general idea at this point of the payroll. So then I'm gonna then total this up. Total. Let's sum this up equals the sum of these 2. These are the taxes that we pay over and above. Underlining this item, font group, and underline it. And then we can total that up this way equals the tote. Like so. So that looks good. That looks good. And then we can also, let's total up this way equals the sum of these 2. Sum it up this way. Underline it. And then we can double check our total summing this way. And then we can sum it this way. Double checking the totes. And then we're going to then put our blue and border this. Blue and border. Blue boards. And then that's going to be then, I'm going to call this the total increase to payroll liabilities. And so the total increase is going to then be the Social Security and the Medicare. This is going to be the increase to the liabilities, meaning both the employer and employee sides that we're dealing with here. And that's going to be a total. And so then we're also going to have the benefits. The benefits that we're going to have, I'm going to increase, and then we're going to say total. And let's make this black and white. Let's center just these ones this time. Center. And so this is the total increase to payroll liabilities, which I'm going to group into one account when we actually record it, which we'll talk more about when we do the actual transaction. So it would be the employer and employee portion now of the Social Security is what we're going to owe to the government after we take it from the employee and have our portion. Same with the Medicare. So we had to double that up. And then the benefits are just the benefits that we're going to have to pay that we took out of their check that we're going to have to pay as well. And I'm missing the FIT. So the federal, I'm going to pull this over to the right. And I'm going to also add the FIT, federal income tax, which we withheld, that we're going to have to pay. Black, center, white, black and white up top. So the liabilities, once we're done processing a payroll, is gonna result in a total liability that we're going to be owing of the 3,803 for the total liability. So I'm going to make this black and blue on this one. Black, or not black, we're going to make it black and blue. We're going to make it blue and bordered. So there we have it. So now we can think about this then, these two employees one by one or in aggregate. We're going to report it now in aggregate, but you can also think about it on a check by check basis. So let's see what it looks. So let's just recap this, and we'll do the journal entry next time. So if we have two employees, we're going to have their actual, this is what you're probably used to seeing on a paycheck stub. We'd have the pay that they would receive minus what was taken out, and then the net check. That net check is what is actually coming out of the bank account for us as the employer at this point in time. Same thing for employee 2. You can think about that as if all employees were like one employee and kind of record the transaction in that way, which is what we'll do next time. Meaning you could say, well, total gross pay was this, and then we had the withholdings that were taken out, and here's the net check. There's a little bit of a problem with that in practice, of course, the net check that's coming out of the account will be two checks at that point in time. So if we were to record it aggregate as one check, we need to make sure that we can tie it out to the actual amount that's coming out of the bank statement when we do our bank reconciliation. And then we're also going to have, at the same time, an increase to our payroll taxes over and above what we owe Social Security and Medicare. These are not going to be paid at the point in time we process the payroll, but they will be increasing at that point in time. Therefore, we'll have a liability on the books once we process the payroll of the federal income tax that's all coming from the employee paycheck. We just took their money, that's in theory, and held it because the government made us do so, but we don't owe any. That's not our federal income tax. We'll have to pay that separately, depending on our taxes. This is their federal income tax. Then we have the Social Security, which includes our portion and their portion. Medicare, which includes our portion and their portion. The benefits that we took from them that are going to increase the liability. These are the liabilities that will then be increasing and be payables on the balance sheet, which we could put as one lump number as payables, or we could break them out to different accounts. So next time we're going to take this general information and see, okay, how can we actually take this and put it into a journal entry, recording it into our accounting system.